Hello and welcome. This is a special deep dive brought to you by the experts over at My Tax Accountant. Today, we're talking about a really powerful UK tax break for married couples and civil partners. It's called the Marriage Allowance, and trust me, for the 2025/26 tax year, it could put a surprising amount of cash right back where it belongs, in your pocket.
So let's just cut straight to the chase with a huge question. Is it possible that you and your partner are accidentally leaving over £1,200 with the tax man? I know it sounds crazy, but stick with me, because a really simple, totally free application might just mean you're due a pretty significant tax refund.
So what is this tax perk all about? Well, it's called the Marriage Allowance, and it's as simple, but you'd be surprised how often it's overlooked. Way for couples to lower their tax bill every single year. Let's break down how this little secret saving actually works.
Okay, so the core idea is actually brilliantly simple. Here in the UK, every single one of us gets what's called a personal allowance. That's the amount you can earn completely tax-free, which stands at £12,570. Now, if one partner earns less than this and doesn't use up all of their allowance, they can transfer a fixed slice of it, exactly 10%, over to their higher-earning partner.
And what does that transfer actually mean for your wallet? What's the bottom line? Well, for the 2025/26 tax year, it can reduce the higher earner's tax bill by up to £252. Now, this isn't a cash payout, it's a direct reduction in the tax you owe. That is £252 back in your family budget. Simple as that.
To make this all feel a bit more real, let's follow a couple. We'll call them Alex and Ben from London. Alex is a self-employed graphic designer, and their partner Ben works part-time while they're studying. Their situation, well, it's a picture-perfect example of where this allowance can make a huge difference.
So here's their financial setup. Alex, being self-employed, is bringing in about $40,000 a year, which makes them a basic rate taxpayer. Ben, on the other hand, earns $8,000 from part-time work. That's way below the personal allowance, which means Ben pays zero income tax. You see? This is the classic scenario the marriage allowance was built for.
Of course, this isn't for absolutely everyone, so you're probably asking, well, do we qualify? Let's run through the official checklist right now. This is where you find out if you and our couple Alex and Ben can actually get this money.
All right, here are the 4 golden rules. First, you've got to be married or in a civil partnership. Just living together, unfortunately, doesn't count. Second, one of you, the lower earner, must have an income under that $12,570 personal allowance. Third, the other partner needs to be a basic rate taxpayer. And finally, you both need to have been born after April 5th, 1935. Looking at Alex and Ben? Yep, they tick every single box.
Now, here's a quick pro tip. Where you live in the UK really matters. For the higher earner to be eligible, their income has to sit inside that basic rate band. For most of the UK, that's anywhere between about £12,500 and £50,000. But, and this is a big but, if you're up in Scotland, that threshold is actually lower. It caps out at $43,662. That is a crucial detail to get right.
Now here's a little trap you need to be aware of. If the lower earner's income is just below the personal allowance, transferring could, ironically, make them liable for a tiny bit of tax. Let me give you an example. If Ben earned £11,500, transferring the allowance would suddenly make £190 of his income taxable. The couple would still save money overall, for sure, but the saving would drop from £252 down to $214. The moral of the story? Always do the maths first.
So, you qualify. How do you actually get your hands on this money? Let's walk through the application, and then we're going to uncover what I think is the most powerful part of this whole thing: backdating. You know, applying is actually surprisingly easy. First, just double-check you tick all those boxes. Then, you're going to need both of your national insurance numbers. Now, here is the most important part. It is the lower-earning partner who has to make the application. The quickest way to do it is online through the gov.uk website. Once that's submitted, HMRC will process it, and they'll sort out your tax codes. Okay, so that takes care of this tax year. But hang on a minute. What if you've been eligible for years and you just never knew about this? Have you just missed out on all those potential savings from the past?
The answer to that is a huge resounding no. This is the best part. HMRC actually lets you backdate your claim for the last 4 full tax years. That means right now you can claim for every single year going all the way back to 2021/22, and each one of those years could be worth another £252 saving.
And here it is. This is the magic number.
If you backdate for those 4 years and you claim for the current year, the total tax refund could be as much as £1,256 paid to you in a lump sum. For a family like Alex and Ben, that's a massive financial boost. That's a holiday, or a big chunk of debt paid off right there.
Okay, now for all the self-employed people out there, like Alex, or anyone running their own business, listen up. There are a few extra little complexities to keep in mind to make sure you stay on the right side of the rules.
Right, for company directors, this is absolutely vital. You have to know how your total income is calculated. It is not just your salary. It also includes any dividends you take from the business. So a salary of £12,570 plus, say, £30,000 in dividends puts your total income of £42,570, which keeps you eligible. But you can see how easy it would be for those dividends to accidentally push you over the threshold.
So the big takeaway for freelancers, for sole traders, for directors is this. Your income isn't always stable, right? It can fluctuate. One really good year, one big contract, or one large dividend payment could push you into the higher rate tax band, and poof, you're ineligible overnight. You have to monitor your total income carefully throughout the year.
Now, to make sure you get this right and you actually get to keep the savings you've claimed, let's quickly cover some of the most common mistakes people make so you can just sidestep them completely.
So, after you apply, your tax codes are going to change. Don't let this freak you out. It's really simple. The standard code is 1257L. The person giving the allowance will see their code change to one ending in an N. Just think N for negative allowance given away. The person receiving it gets a code ending in M. Think M for marriage allowance received. If you don't see these on your payslip, you need to chase up HMRC.
Okay, here are the top 3 tripwires. First, this allowance rolls over every year automatically. So, if your life changes, you separate, or one of you gets a pay rise that makes you ineligible, you must tell HMRC to cancel it. Second, don't just assume that backdating happens by itself. You have to specifically ask for it. And finally, please check your payslip to make sure the tax code has actually changed.
Right then, you are now armed with the knowledge to potentially save hundreds or maybe even over £1,000. So let's just recap the absolute key takeaways and talk about where you can get some expert help if you need it.
So let's do a super quick summary. You can save up to £252 this tax year. You can backdate 4 years for a potential refund of £1,256. Remember, it's the partner with the lower income who has to apply. The higher earner must be a basic rate taxpayer. If you run a business, keep a close eye on your total income, including those dividends. And finally, once you've applied, check those tax codes. And there you have it, the marriage allowance, all explained. Look, if you're still a bit unsure, or if your situation feels complicated with business income and things changing all the time, please don't leave it to chance. Get some professional advice. The team at My Tax Accountant are absolute experts in this. You can get in touch with them directly on WhatsApp or by phone at 07854 255 375, or just drop them an email at info@mytaxaccountant.co.uk. And for more great tax-saving explainers just like this one, make sure you subscribe to their YouTube channel. Thanks so much for joining us.